What a flying start to the week it's been. The economy is on the fast track to recover and markets are celebrating. The Nifty today broke a psychologically important barrier, crossing 8,000 for the first time in its history as investors cheered the better-than-expected GDP growth in the June quarter. The Sensex rose for a seventh session in a row, touching an all-time high of 26,900, while the Nifty hit 35 points before ending the day a tad lower. Interestingly, the new high for the market coincides with the Modi government preparing to celebrate 100 days in office.
In fact, the Sensex has gained as much as 12% since May 16th when the Modi-led NDA swept the Lok Sabha elections this year. The party is unlikely to end anytime soon, with macro numbers now pointing to an early economic recovery. Experts say that markets may gain further ground, tracking positive trend in the current account deficit. The Nifty conquering Mount 8K, and what should be your strategy in case you missed the party to begin with, is a top story on Business Tonight.
On Tuesday, Narendra Damodar Das Modi's government will mark 100 days in office. And Dalal Street, which has been cheering him from day one, is celebrating it with a new milestone. The 50-stock benchmark index Nifty crossed 8,000 points for the first time in its history. The immediate trigger is, of course, the better-than-expected GDP growth numbers of the first quarter. At 5.7%, GDP growth has been the best in 2.5 years. While sentiment had turned positive many months ago, it is now being matched by economic data.
We are looking at a few good data prints here on the domestic macro front. There is a lot of focus on getting the infra right, which I think is a huge kind of focus area that we have to focus on. There is a slow amount of repair happening on corporate balance sheets.
What investors want before pumping more money into Indian equity is signs that earnings will keep pace with valuations. With the macro story improving, the inflows will only accelerate. Since January this year, FIIs have poured in a stunning $13 billion or 78,000 crore rupees. Market experts say this is just the beginning of a long rally ahead.
You know, we're not on a P of 15, we're probably on a P of 9, 10, 2 years out, you know, in terms of the strong earnings growth. So, you know, that's why I can see the market doubling over the next 2 to 3 years.
With concerns over growth easing, the Modi government will have to focus on ushering in other growth drivers such as investment in infrastructure and tax reforms like the implementation of the goods and services tax. Ashwin Mohan, ET Now, Mumbai.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.